ठीक है, इसको नहीं दिखेगा सर। हाँ, बट इधर भी पूरा ही दिखता है, वो बेटर रहता है। नो नोट्स। Okay. Sorry, there was some technical problems. So the clause 1 we were on the name of the SSC. However, the trade name, many times we see that the name of the SSC on the PAN card would be, say, let us take an example, ABC, whereas he is carrying on his proprietary concern as a trade name, and we are auditing only his proprietary concerns and not nothing to do with his personal income or expenses. In that case, the trade name should be separately mentioned. Again, as I said, while uploading, there may be some different issues, but we will put an appropriate disclaimer on appropriate, rather clarification. When we come at the end of the session, we will show you that yes, by putting that end, in case if there is any dispute, then the physical copy should be read. That means it shows to the department that there is something different in the physical copy as compared to what has been uploaded. Because for uploading we have a restriction. But at least I think we should avoid the printouts directly coming from the computer systems what we have, or a software what we upload on. That should be avoided. A physical copy of 3CB, 3CD should be issued the way we are supposed to. The second is the address. Address also should be address as the same what is communicated to the income tax department, that is the latest address should be given. And sometimes if it's a company, we should match it what is the registered address of the company, because that is an address what we have it available with us while auditing. Okay, how do you go? Clause 3, which talks about whether the SSC is liable to pay indirect tax like excise duty and all that. Here, obtain from the SSC the list of all indirect taxes applicable to him. After and that should be forming part of your, I would say, MR, management representation, that yes, this is what has been applicable to the SSC, and those are reported along with those corresponding numbers with the registration where it is involved. Yeah.
That sales tax numbers now it is GST. So there is no sales tax, but earlier sales tax matters are pending.
The sales tax number is, look, if the SS, if it is still has any connection with the pending proceedings, in that case, yes, you should even mention the sales tax number. Otherwise, you need not mention, you can avoid using it now. Sorry? Okay. Clause 8, which talks about the selection under which subsection or subclause you are getting, you are doing the audit under 44AB. The most appropriate mistakes which I have seen is if it's a private limited company, then you have to clearly mention that the audit is as per the proviso to section 44ABA. And where which says aggregate cash receipts and payments of business specified exceeding tax limit, that is one. And secondly, what I was trying to say is that in case of auditee being a company or a LLP required to get accounts audited under any other law, should select third proviso to section 44AB as applicable to the respective private limited company. I don't know what went wrong. ये चलता नहीं है डायरेक्टली. Yeah, can you help me? हाँ, ये स्लाइड चेंज डायरेक्ट होता था पहले, अभी क्यों नहीं हो रहा है? एक सेकंड, सीधा टक टक करके 3 के बाद 4. एक बार 4 ले लो बाद में. ये वाला. हाँ, नेक्स्ट आना चाहिए ना सीधा, वो नहीं आएगा. स्लाइड चेंज के लिए माउस यूज करना पड़ता है, या तो इसको हटा दो, डायरेक्ट आना चाहिए. यानी चेंज ना, पहले आ रहा था बरोबर ओरिजिनली विदाउट दिस. इस पे आओ, स्लाइड शो पे करेंगे तो रहेगा. ठीक है ना. गड़बड़ हो गया. क्यों होता है? ऑटोमेटिक आ रहा है. ये स्लाइड शो में, हाँ एग्जैक्टली करंट स्लाइड. ओके बस, तो ये आया. दूसरा रास्ता नहीं है अभी. नहीं रास्ता. अरे यार ठीक है चलो. ओके स्लाइड पूरे देखेंगे नहीं तो. हाँ मुझे समझ गया. दैट एंड्स. ओके ऑल राइट. Now coming to another clause 8A, wherein a small amendment 115 BAE has been included, and that is for the purpose of cooperative society, which has been included. But auditor should mention the selection or the choice of the SSC as on the date of signing of the report, because normally the reports are signed today, but he is going to opt tomorrow. So in the MR, he should take that what is he going to opt for. If he's going for any other new regime, if he's going for a new regime, he should obtain that in MR that I will be going for a new regime, and only thereafter accordingly he should report in this clause 8A. If a firm or an person or AOP indicates name of partners, in that case, details of partner or member during the entire previous year will have to be mentioned. And need to verify the instrument or agreement, because many times we say, he's a partner. No, if there is any change, the latest change, you please kindly inform us. And more so if it's a limited company, then you can always verify from the ROC records also. Yeah, now coming to where the books of accounts are maintained. I'm sorry, they are prescribed under this. Nothing much to say, that only the professions which are specified in 44AA, in those cases we have to say that the books are prescribed by the law. Otherwise there is no books of accounts prescribed by the law. Now friends, clause 11. Clause 13 I have not been considering over here, which is on clause 13D, E and F on ICDS, because that itself would take a big chunk of the time. And since it is not applicable to majority of them, Unfortunately, I don't see any reaction. It is applicable. It is applicable, maybe not all the ICDS. Sorry? Exactly. I appreciate. Not cash receipt. But otherwise, it is applicable to everybody. And more so where it is applicable, I will give you a simple example, and that is in case of inventory, valuation of inventory. ICDS 2, which talks about that ICDS says that your inventory needs to be valued inclusive of your taxes and duties. Whereas our accounting standard 2, Ind AS 2, says that it has to be exclusive. So there is a straight difference between both. In spite of that, we have seen that many of our reports that ICDS when it comes to मेरा तो छोटा size का firm है, concern है, वो है not applicable, which is untrue. This is one simple example of inventory, that is the closing stock I have given. There are others also. If there is any foreign transaction, there also it would be applicable. So don't just blindly say that it is not applicable and therefore we skip clause number D, E, and F. And when it comes to F, F talks about disclosure. So ICDS disclosure you are supposed to give. The first ICDS talks about accounting policies. Mandatorily, you are supposed to give the disclosure. There may not be any difference. So for the difference part, you may say no. But the disclosure is required to be given. So similarly, when it comes to depreciation fixed assets, we are supposed to give what is addition, subtraction. That's a disclosure is required. So just don't ignore it saying that it is not applicable. However, I have not run through these clauses in detail because it would have its own time required for that. So I'm straight away coming to clause number 14, which talks about method of valuation. I had just touched upon method of valuation of closing stock employed during the previous year. Here the term used is closing stock, and which will include all items of inventories. It does not include stock in trade. Therefore, the method of valuation you need to mention of all the items that is part of your inventory, whether it is raw material, WIP, stores, components, or packing materials, loose tools, etc. So all those bases of valuation you are required to mention. And valuation does not simply mean LIFO or average cost that you are adopting. How have you considered your average cost or LIFO? That also needs to be mentioned. Details of deviation, if any, from the method of valuation prescribed under 145A and the effect thereof on the profit and loss account. As I just said, that accounting standard 2, AS2 and Ind AS2, they both require that your inventory needs to be maintained net of your taxes. That means you have to follow, by default, you have to follow exclusive method. And 145A talks about you need to follow inclusive method. And when this question is asked, we write down there is no deviation. After this GST regime, it is very clear that most of the SSEs are following exclusive method. The reason being they are getting the benefit of the GST input tax credit. If they are following exclusive method, in that case, there is a deviation from section 145A. 145A talks that your sales, purchases, inventories need to be inclusive. However, just so the first question, whether it is followed, there is a deviation. Yes, there is a deviation. Then the second question asked is, if there is a deviation, you kindly give the reconciliation. In that case, we may say it does not have any impact on the profitability, and therefore the details are not given. And fortunately, we are supported by number of pronouncements, including Supreme Court, which says that even if you are following exclusive method, it does not have any impact on your profit and loss account. And our guidance note also gives this support. However, this should be very clearly mentioned in our Form 3CB or 3CA also, that the details in clause 14B are not given because it does not have any impact on the profitability as per the guidance note and as per the judicial pronouncements. But it should come out very clearly. Okay. The next one is amounts not credited to the profit and loss account. Now there are 5 sub clauses which talks about that you are required to mention if they are not credited to your profit and loss account. If they are already included in your profit and loss account, you need to ignore it. But if they are not included, so few examples just I'm trying to take. One is the conversion of stock into capital asset. We have an amendment 3 or 4 years back, which says that your conversion of stock into asset, a capital asset, is treated as your business income. However, it will not fall into your profit and loss account. So the date when you are converting, the market value of that will be treated as your business income. And it requires to be reported over here because it is not credited to your profit and loss account. The second one is the benefit under section 28(4). That is the hue and cry that has been created and taxes which requires to be deducted under 194R. The perquisite or the benefits that an assessee gets during his business, out of his business. In that case, many a times it goes unreported. It's not even accounted in the books of account. For example, an incentive given by a company to his dealer, and the incentive is by way of gold coin. That gold coin is lying the residence of a proprietor. वो घर पे ही चला गया सीधा, बिजनेस में आया नहीं, इसलिए बुक्स में भी आया नहीं. But he has deducted 194R under section 194R, 10%. So it is reflected in 26AS. At least auditor is aware about it. He should bring it to his notice, and that should be reflected in this clause. Employees' contribution to PF and ESCI. Employees' contribution is an income under section 224(10). First of all, let me say what the guidance note says. I have a different view on that. The guidance note says only if there is a disallowance, then you are supposed to report over here. Whereas, if you read the wordings, the clause says amounts not credited to the profit and loss account, and if it is an item which is an income nature, any other item of income, clause D. So it is an income under section 224(10). However, it is allowed as a deduction if it is paid within the due date. So 36(1)(5) will allow you a deduction. And that's the reason why normally in our computation, we don't treat it as an income and therefore as an expense. But now after these judgments and amendments, relying on this decision of our the guidance note what we have, which says the disallowable items need only to be mentioned, then we are safe enough to mention only the disallowable items. But at least we need to mention the items which are disallowed. And a cross reference, because this will again be covered under clause 20B also of 3CD. So we need to mention that also. And the same has been also covered in 20B, because I am also not aware what our CPC is going to treat it as. इधर भी इनकम गिन लेगा, उधर डिसअलाउ कर लेगा, तो देयर विल बी an unnecessary double hit. और वो होएगा तो इमीडिएटली ब्लेम विल कम ऑन एन ऑडिटर. एसएससी तो बोलेगा ये आपने इधर रिपोर्ट किया क्यों, लास्ट ईयर तक तो नहीं कर रहे थे, ये महेंद्र संघवी ने बताया आपको और आपको सूली पे चढ़ाया. So we should give a cross reference, and that cross reference we should give at both the places, in the respective clause of form 3CD as well as in form 3CA or 3CB. The next one is dealer in immovable property. If property transferred at price lower than stamp duty value, difference more than 110% of consideration, we are supposed to report whether it is an income. If he is a dealer, 43CA applies. If he has sold below 110%, if he has sold below, say, let us say he has sold at 80%. So the difference of 20%, that is the agreement value and the 50C value, 43CA value, the difference is required to be reported as an income over here. That's a different thing, because the law says so. That's a different thing whether it would be disputed by way of DVO and all. Those all required under section. I'm sure Jagdish Bhai must have possibly dealt with it. In that case, the assessing officer has to see to it, but as an auditor, we are supposed to report over here. Compensation for surrendering certain rights. The scope of section 228 has already been expanded, because they are treating all rights now as an income. Anything you receive is an income. So there also, if you're surrendering any rights, though it will be treated as your income. Government grant. $110%. Now it is 10%. 105% it was. So now it is 110. Yeah, cost plus. Sorry? Yes, because here the law talks about simple. What is the difference amount, and if the difference exceeds 10%, up to 10%, it's okay. If it exceeds 10%, you are supposed to.
If the agreement is before.
Okay, he's talking about that. Yeah, that benefit he's supposed to. Okay, I didn't understand your question. So if your agreement is prior with, not agreement, you can say appointment, some allotment letter, and with the proof and evidence that you have made the payment by check, then in that case, yes, that benefit you will get. Though you have to consider the rate, what was applicable on that date.
Determine that is because in your agreement which is registered, that what they write, they will write current.
I appreciate. There would be a possible dispute, because what is flagged or what the stamp authorities have submitted to the income tax department is the stamp duty value when you have registered the document. Whereas the document or an allotment letter you would be having 5 years earlier. So 5 years earlier, you get the stamp duty value. It's a ready reckoner value. Stamp authorities के पास जाओ, आजकल तो broker भी देते हैं, और most of the advocates who are practicing in this stamp duty, they have that. By your CTS number, you can get it. As a tax consultant, I won't be able to help you. Not necessarily approved value. Your stamp duty value, ready reckoner value. Your ready reckoner value, you will get it. You simply have to tell your advocate or whoever is dealing into it, or even if you get into it personally, you will get it. You go to the registrar's office, you will also get it. There is a ready reckoner value available every year. On year-to-year basis, CTS number will give you that value.
So in that case, in reporting, we cannot do anything. Only thing when the case comes into the.
Appreciate.
In your newly registered agreement, all that clauses should be the annexure.
I agree.
It should be the annexure, then only it will help. Subsequently, you.
No, not necessarily. Then only it will help, but definitely it will give a support, immediate support. That look, I had already entered into that allotment letter is there with the evidence that when the payment was made.
And at the time of doing agreement, and today if I am doing the agreement, I am well aware that I have booked 5 years before. So I should make that paper, allotment letter, my supporting bank statement.
Part of your agreement, part of agreement,
duly stamped by the registrar office, definitely you get success. An approved valuer gives you the valuation of any day, 2001 का भी valuation आज मिलता है. That's what I said, approved valuer will stamp office doesn't give you.
Okay. From wherever you can get it, please get it. Okay, let us solve this issue over here. Okay. Yeah. Now, amendment in clause 21. I don't know what the department or the government is trying to how they are trying to penalize. I understand SSC को तो तुमको penalize करना है, but it becomes very difficult for a tax auditor to report on such things. Originally, 21A, we had only 3 clauses where we were supposed to report on. And those 3 clauses, if you see, were first asking expenditure by way of penalty or fine or violation of any law for the time being in force. Second was expenditure by way of any other penalty or fine not covered in earlier clause. And third was expenditure related to that, offenses and all. Section 37 proviso amended once, amended second. Now again they have an amendment in our latest finance bill also. So we are seeing that somehow they are including, first it was restricted to only Indian laws. When we understand that a violation of any law for the time being in force in India, the interpretation that government thought that why restrict to India only? Now that we are growing global. So all throughout across the world, जो भी law आप violate करते हो, you are supposed to, if you have paid any penalty on account of that, you are supposed to mention it over here. And not only that, as per section proviso to section 37, it stands disallowed. Thereafter, they even included the compounding fees, which to the best of my knowledge, the compounding fees is like today a company is paying a fees for uploading certain documents not in time. It does not, the company only doesn't pay the compounding fees. Even if there are 5 directors, all the 5 directors are also required to pay that compounding fees. So all 5 plus 1, 6, say it is lakh of rupee. So 6 lakhs you are supposed to pay this compounding fees. It's a trivial, venial violation. I appreciate, yes, it's a violation. I was supposed to upload this form within 30 days. Because the site was not working properly, instead of 30 days, I could not do it in 30 days. It was done in 3 months time. Then compounding fees, forget, I don't want to get into any dispute. I am paying compounding fees so that the auditor does not report that contingent liability aega, ye aega. I don't want to enter into. If you're paying that compounding fees, you are supposed to report here and disallow. So one needs to see that whatever professional fees are paid, because the bills which are raised by professionals, they carry certain reimbursement expenses, which includes your compounding fees also. I have seen those lawyers' bills. So then you need to run through those lawyers' bills, wherever the professional bills are paid, to verify that any penalty, compounding fees in India, outside India, वो सब पे किया है, and please kindly report it over here. Then after coming to next one is I will skip that. I just saw the watch now. We need to rush up a little bit. Nothing very much coming out. I understand they will be circulated. Will this be circulated, PPT? Yes. So you all can have a reference little later also. Clause 22. Yeah, I will have to give some time on that. That's the reason I skipped the earlier one. Now this clause 22 MSME. They want to somehow promote all MSMEs. Very good intention. In this promotion, when we went to CBDT last before the budget and we presented and we told that, sir, in the guise of MSME, to promote them, it is so happening that people are withdrawing that certificate as an MSME because they are not able to carry out the business. What nonsense, the wordings, what nonsense, you don't have the correct figures. We have got appreciation letters wherein the associations have said that thank you very much for introducing this. And you are saying that people are not appreciating this. Then I was taken aback a little, but then very in a timid language, I said, beg your pardon, sir, I have at least two industries, a clear example I can give you, wherein they have withdrawn. Tell me. So I told first is textile. I know this, both the industries. When they know this, but still they don't want to accept it. And then they concluded, whatever it is, we will not change this law. If at all, let the MSME, that is the Trade and Commerce Ministry, change it. If they do that, we will accordingly take cognizance of that. But nevertheless, now what as an auditor we are supposed to do, that is the major issue what we have. Now only they have extended this clause. First of all, there is no corresponding section 43B respective clause which is amended. Here only the amendment is clause 22, and which says or any other amount not allowable under clause H of 43B. That needs to be reported over here. So basically what they want is one figure which says that what amount requires to be disallowed under 43BH. That is what they are asking for. Now, as per our guidance note on financial statements of non-finance corporate entities, which I understand was issued in August 23, but they have extended and made it applicable not for this year ended, but for next year ended. It is mandatory wherein the T format is done away with. Now we will have a vertical format and like all our corporate SSEs, like companies. So vertical format with the previous year figures and giving an information of MSMEs also, like how for our company audit we are supposed to give information as per schedule 3. Similar lines in a more depth we are supposed to give now for our non-corporate SSEs also, though it has been made applicable from the subsequent years, but many chartered accountant firms have started applying it from this year only, for the reason that previous year expenses in any case we will be requiring it to give it from next year, so might as well start from this year. So therefore, as an auditor, when you are reporting there in your financials, make sure that similar reporting is correspondingly captured for your this clause 22. Assuming that it is not in the vertical format or the new format what we are, in that case, we will have to, first of all, the good thing is our guidance note says that you are supposed to take a statement from the SSE. Based on that statement, on test check basis, you have to verify whether he is an MSME not covered or covered. Because even if he's registered as an MSME, he may not be a small or a micro one. because only those two are covered. And third, if he's a trader, also he is not covered for the reporting purpose of our this clause. So that one needs to be careful about. So if even if he's registered and if he has a letter attached to this that I am a trader, he need not report and he can exclude himself from this MSME reporting. Okay. Now, for understanding purpose, this small, I would say, questions. There are 5 people over here who are the suppliers, and they are Sodi, Bhide, Popat, Hathi, Iyer, and Jethala. These 5 suppliers, they have a registration with MSME. Only Popatlal does not have any registration with MSME. The categories of enterprise, what they are registered are small, micro, medium, small, and this thing. So the questions we have different. The date of registration is given, date of transaction is given, and date of payment is given. Now the question comes whether the disallowance is to be reported in all these cases, in all the 6 cases or not, that is important. So let us take one by one. For Sodi, he has a registration on 1st April 24. The date of transaction is 31st December and the date of payment is 5th of April 24. Whether a disallowance is required to be carried out, the answer is straight no, it is not required to be carried out because he is an registration of sorry, not right. So on the date of transaction, since it was not. The second one again, the registration is 1st April 23 instead of 24, it is 23. The transaction date is December and payment date is again the same 1st April. He has to be, the reporting has to be given. The third one is Popatla not applicable, registration was not there, and therefore the question does not come at all. Now, when it comes to Hathi, 1st April 23 he is registered, transaction is 1st April 23, and the payment made is 1st April 24. Very right. And Iyer ji jo hai, 1st April 23, 1st April 23, and payment made again 1st April 24, but he is a trader. So he is also not required to be given. Now here there would be a difference to view, the last one when we see. 1st April 23, 31st March 24, and the payment made is 1st June 24. On 31st March, he was the transaction was carried out. He is a creditor. The payment was required to be made, say, in 45 days for our, without getting into dispute. 45 days he was supposed to make. He has made the payment after 45 days. The audit is also not finalized. The audit is finalized after the payment is made, which is much after 45 days, whether he's supposed to report or not. So some says no, some say yes. So let me finish this, and then if you have something else. Here in my view, I would say that he may not report it. However, the institute's guidance note says very clearly he's supposed to report it. Why I'm giving this not to be reported is for the simple reason that we have a specific clauses wherever required. Say, for example, cash payment above rupees 10,000. If it is a creditor, if he is making a creditor whose liability is, say, 25,000, that's 25,000 is made in the subsequent year, but the year which you are auditing, you do not make any disallowance. Am I right? 48(3) does not take any call for any disallowance. However, in year 2, when he's making this payment to a creditor, this 25,000, this disallowance is called for because of a specific provision 40(a)(3)(a). There is no such provision provided over here. if any such thing was required, they could have done it. However, I leave it on the practitioners over here, whether they want to report, they don't want to report. I have given my view. This is one. Secondly, if I am auditing and finalizing my audit before the due date of the payment, then I do not have to report. Just because the audit is carried out later on, I am supposed to report and make the disallowance. How can you have a different view for that? Just because the audit is carried out late? So these are certain support if you do not want to report. Okay. Coming to the case study of Gala Electronics, he is liable to, now these case studies will create some complications, and then we have an answer to that also. Gala Electronics is liable to get its accounts audited under 44AB. As on 24, a provision for audit fees of 5 lakh rupees payable to Babita Iyer is made. And this Babita Iyer is a registered small enterprise under MSME. Audit for Gala Electronics is completed on 31st of August 24 without making any disallowance under section 43BH. Payment of audit fees is made on 1st April 25. Audit fees paid late, obvious because the service was rendered late, so given after that. But the payment is made, ये तो बबीता और उनका है understanding. So it was made late on 1st of April 25. Now, whether Jethalal is right in not disallowing any amount under section 43BH for the amount debited to profit and loss account for the year in audit, that is assessment year 24-25, the answer is yes, he does not require any disallowance in that year. Will it make any difference if return of income is uploaded by Mr. Jethalal on 20th April 24? Answer 20th October 24, the answer is no, because according to, I have taken a different view that 31st March. Furthermore, the services were not rendered till the date when he was, his credit liability was created. This is nothing but an provision. So also all this supports gives that he is not supposed to make any disallowance. Now coming to assessment year 25-26. The audit fees is outstanding. Mr. Jethalal wants to know whether the disallowance needs to be made on under section 43BH. Why yes? This amount itself is not appearing in the profit and loss account. This is of the earlier year. So therefore no. I have for more reasons, but let us conclude this and run through another. The second one, in case one, don't get carried away with Babita and Gala. Now, in case one, instead of audit fees, if it was a commission and it was paid to Mr. Sundar, Sali ji hai unke. After receiving the services, Sundar has raised the invoice on 31st of March 24. Sundar is registered as micro with MSME. For assessment year 24-25, Jethalal filed his return of income on 1st October 24, making disallowance of rupees 5 lakhs under 43BH as amount not paid to Sundar. Subsequently, on 1st December 24, Jethalal has made part payment of commission of rupees 25,000 to Sundar in cash, and balance payment is made in check. Here the complication is mainly because of his Sundar. Sundar को cash चाहिए, अभी का भी चाहिए, तो लेके गया. Now for assessment year 25-26, Jethalal wants to claim deduction under section 43BH of the entire 5 lakh rupees. Because year one he has disallowed. The year two, as per the provision, he is allowed this entire 5 lakh rupees. Am I right? But cash में हुआ है 25,000. So if you are making the payment in cash 25,000, so section 40A3A attracts. So 25,000 is disallowed there and 5,000 is allowed over here. Am I right? There was no, I'm sorry, there is no allowance of said amount in earlier year. Therefore, this 25,000 will not be disallowed. You start with the provision of section 40A3, 3A. It talks about the amount allowed earlier year. If it is paid in cash in the subsequent year, then it is to be disallowed. This amount was not allowed in the earlier year. So a little bit of tax planning. Okay. Now another one. Say in our first case study, this GADA Electronics has not deducted TDS on audit fees of 24-25. Babita Iyer, auditor, will report in form 3CD in that clause 21B, non-deduction of TDS, and also in clause 22, which is on MSME, or whether he's reporting only. So he's supposed to report in which one? TDS ka ya MSME ka? Or in both? Both. So you know what will CPC do? 30% उसमें से डिसअलाउ करेगा और इधर से पूरा करेगा. Right? No. Nothing is to be reported in clause 22 as it is an audit fees provision, as we just decided. All right. So in the hands of Jethalal, only 40A 1A में 30% will stand disallowed. Now in the subsequent, say in assessment year 24-25, Jethalal in computation made 30% disallowance under 40A 1A and did not make any disallowance under 43BH as we just now suggested. He has deducted and deposited this TDS in the subsequent assessment year 25-26, but payment to auditors is still not made. Can he claim deduction under section 40A 1A of that 30% and avoid disallowance in 43BH of that 30%? Yes, he can do that. That benefit will be available to him. Say GADA Electronics has not deducted TDS on commission of 24-25 of that Babita Iyer. The auditor will report this 30% in clause 21 of non-deduction and 22 in MSME. Respectively, it have to report. Because for 43B says, expense which is otherwise allowable. All right. So if it is disallowable under for the purpose of tax audit, for the purpose of TDS, that needs to be excluded. So what is disallowed is 30% and allowable is only 70%, and that because of that 70% only is to be reported for 43BH. That care one needs to take. Now in hands of Jethalal, okay. So similarly, we get the answer to this. This clause, I would other things important is nothing to do with MSME, but the amount of interest which is converted as a loan because of some, say, OTS with the financial institution or a bank, that he's in a bad shape and they adjust that, okay, this interest amount is treated as a loan now. Whatever. And you are supposed to pay in the periodical installment, whatever is decided. The interest, what has been converted, will that be treated as an income now? And that is to be reported as an allowed interest paid or not. For the purpose of 43B, whether this is to be treated as an interest paid. Section 43B says that if the interest to the bank is not paid as per 43B till the filing of the due date of the return of the income, then that interest will not be allowed. Now, when this interest is adjusted into the loan, whether it is to be constituted as interest paid for the purpose of 43B, the answer is yes. It is to be treated as it's a constructive payment and it should be allowed for the purpose of 43B. Prior period items I would skip at the moment, and you all can just run through the slide when convenient to you people. What happened? Okay. Amount includable in 56 to 10. Friends, forfeiture of the amount of advance towards transfer of capital asset, which is inserted by way of amendment to section. But normally we would miss it out. And therefore, I have mentioned clearly that please be careful that you don't miss it and you need to report under clause 29. Okay. Now GST, uske liye I think you organizer would have organized some session for this GST audit. Nevertheless, let me tell you here in GST, we have to take the help and support of the guidance note, what our institute has given. First of all, it does not, I fail to understand. I am not into the practice of GST. I am into the practice of income tax and audit. But then I'm supposed to know all this nonsense. And how it is going to help to the income tax department, that I fail to understand. Because it will never match your profit and loss account. Any payment, unregistered, registered, exempt one, but make sure that appropriate disclosures are made. For example, salaries, you may not consider over here, then you make that. Remuneration to partners, you may not consider, make appropriate disclosure. Interest, which is otherwise exempted. I understand in GST law there's a difference. One, it is not covered by GST law, the other one, it is exempted. So if it is exempted, you are supposed to mention over here. And if you are not mentioning, you please make sure you make an appropriate disclosure that for the purpose of clause 44, these items are not considered. And this type of disclosures I have given in by way of samples in my slide. I will not run through for want of time, but this disclosure are required to be given appropriately at both the places, respective clause in Form 3CD as well as in Form 3CA and 3CB in the observation clause where I just mentioned in the start of my lecture. And with these words, the last, before I end, the last one which I said is very important is this one. The physical copy of Form 3CB and Form 3CD contains certain explanatory and other notes to the various clauses which do not find place in the electronic form of 3CD which we have uploaded, and in view of the electronic form 3CD should be read together with all the notes appearing in the physical form number 3CD, and in case of conflict, the information provided in physical copy shall prevail. So whenever there is a scrutiny, they ask us for uploading the tax audit report. Though it is there, fortunately, though it is there on the website, on the portal available to the department, but still they are asking us to upload. Good for us. Even if they are not asking, we should so moto upload it by giving him an information that this audit report shall prevail and not the one which is uploaded. Because there are certain disclosures which are mentioned over there which supports of others. With this, viewers, friends, if at all you have time, I am ready to take the question, but otherwise I am thankful to the organizers for allowing me to understand this subject. Thank you, Mr.
Yes, maybe a couple of questions, just two. Yes,
Sorry, yeah.
The transaction is of a trading activity. They are registered as a small service provider. So in that case, whether we need to treat the transaction as trading.
You need to take a letter from them. And if the letter says very clearly, this is a traded goods which I have supplied to you, then you are out of, you need not report. Yeah, use the mic, benefit for all.
So for applicability under 4480.
For the purpose of?
Applicability under 4480. The turnover definition, would it include GST also? So that
Okay.
conflict is-
Yeah. That is in conflict. Now, if you are following inclusive method, then you are supposed to include. And if you're following exclusive method, you're not supposed to include. That's a simple answer which has been accepted by institute as well as which is accepted by the department.
Sir.
Yeah.
Here I would like to add, in the income tax return when you file 3 or whatever, they ask the GST recovery. Net amount 90 plus GST 60 lakhs, so. total
That's why I said just a simply, I appreciate. That's why I simply said it's the simple answer which both are accepting. I appreciate your concern. Because, and more so 145A, which tells you that you are supposed to maintain you're supposed to show your turnover, your purchases, your stock, inclusive of GST element. Still, if you're following exclusive system, both of them have accepted, तो फिर क्यों पंगा लेने का? और किससे चाहिए अपने को?
Sir,
Yeah.
everyone's account is exclusive because here for GST purpose, you are taking it.
So that's what I mentioned in my lecture. Now it's all exclusive. So for all practical purpose, it will be exclusive, except for like some of them are following that composite system in GST is there. In that case, composite system will not have.
Simplest for the client, in that case, he will not be able to penalty.
Appreciate. Sorry? Very important, yes. Appreciate. No. Refer so and so, my note to so and so. Your system will not take, so say 0. I appreciate your system will not take for uploading, not take, but your system will not take. Again, I'm saying, so you don't just rely on your system. While signing your report, you make sure that these two clauses, one, you say yes, then after you say it does not have any impact on the profitability. Nil, then you say it does not have any impact on the profitability in view of the guidance note. Further, in view of the various judicial pronouncement. So you mention in that respective clause as well as you mention in 3CA. Absolutely. Yeah.
That was converted to
269, whether it's a acceptance of loan. First of all, in 269 ST, you do not report the transactions with bank, right? Bank, they're excluded. And this all facilities are normally with the bank. Taking a step, supposing if it is not a bank, in that case, yes, it's a loan accepted. Then you have to report, then it's a loan accepted. Sorry? Why penalty? Okay, you are saying it is otherwise than by an account paid check. So you are saying it's a journal entry. Except for Bombay High Court, Trump International, except for Bombay High Court, there are various judicial pronouncements to say that the journal entries are not included. And I'm sure this type of transaction, even the Bombay High Court will have to reconsider his own decision. I appreciate Bombay High Court is against. Let me tell you that. They say that even the journal entry is to be included. But there the journal entry before the Bombay High Court was between the two different concerns. Trump International and another his associate concern. They had passed that entry. That's the reason Bombay High Court said. However, the penalty was ultimately not payable. Bombay High Court said technically there is a violation of section 269 SS. 60 there was T 269 T. However, he is prevented by reasonable cause and therefore no penalty should be levied. So ultimately it was like win-win situation for both of them. I appreciate it. Yeah. Because unfortunately that limited scrutiny concept is gone. Otherwise, it should have been only for to that extent. But the better alternative would be in such cases, you can either give a disclaimer saying the journal entries are not included for the purposes of this clause. And that case don't include.
NBFC, that was the paying EMI. Customer TDS or interest of that, so 90s are excluded. Sometimes what happens when you're giving an EMI, the amount is zero interest. So, in case then they can-
You miss that, but you're supposed to. Particularly, say for example, Kotak Finance something. Because the name resembles Kotak hai, so you auditor, you feel, oh, it's a bank hai. But it's actually an NBFC wherein you are required to deduct tax. It miss out. You have to be careful.
So, for the working out, because practically it was-
They give you the separate chart, your principal amount and your interest amount. No, they always give a separate chart. You ask for a separate chart. They give you, the bankers give you. NBFC, they give you. They ask. Yeah, thank you very much for your patience here.
So I request, immediate past convener, it would be to give a formal vote of thanks. And please be seated for the lucky draw.
यहाँ कैसे आ गया मेरा पेन ये तो A very good afternoon to all of you. Thank you, ma'am, for giving me this opportunity. On behalf of the JV Nagar CP Study Circle, I would like to propose a very hearty vote of thanks to our today's second speaker, CM Mahendra Sanghvi. He's taken up all the relevant provisions of the tax audit report with us, explaining very well with the help of examples, which has helped us to further understand the provisions well. Thank you, sir, for your very elaborate presentation. I would also like to thank all the coordinators today who have helped in the management of the event. Also, a big thank you to all the participants for participating and making it lively. Thank you.
Okay, Sanjay Bobra, is he here? Sanjay Bobra? Good.